Good afternoon, Sifters. It is the week of January 5th, 2026. I'm Tyler Sherven with my co-host CJ Gettelfinger, and welcome to today's installment of the Weekly Sift Stack.
We hope everyone had a great new year as we're ringing in 2026. It has definitely been a pretty eventful couple first days to start the year. So Tyler and I have definitely got a lot to unpack in today's episode. But to start, Tyler, let's just go over those final numbers that we saw across all the index trackers to close out 2025.
And yeah, Burrs, well, I'm sure throughout 2025, I'm sure a lot of you probably achieved your New Year's resolutions with the markets. We saw the S&P 500 with dividends reinvested up 17.88% for the calendar year 2025. Very strong. We almost camped off 3 straight years of 20% plus growth, just short of it. Again, can't complain about 17.88%. Now, looking down, we're going to do something a little different. We're going to pick out a few more of these indexes, major important ones, and to see how they stacked up. So, international markets, looking at the EFA, was up 31.22% for 2025. Very big year for the international markets. So, this is the first time international had beat out the US during a positive growth year. This is the first time since 2017. And this is going to tie into the US dollar index, which actually performed worse, the worst out of the indexes we track. That is down 9.41% for the year 2025. So it's important to note about how the US dollar, how it impacts the markets. This makes US goods, US services cheaper for the international businesses and such. So you're often going to see the US dollar index go down and the international markets go up. And that's what we saw over this past year. Just incredible growth with the international equity markets. Covering a couple more here, the Bloomberg US Area Bond Index. CJ, I know you love hearing that the bond index is producing almost equity-like numbers here. We got a return of 7.3%. Bitcoin, big popular one here. It was down 6.02% for 2025. And then the winner out of the indexes we track, gold, up 67.41%, finishing as the top dog on the Sift Stack. Again, we wanted to know what gold. Gold is one of the oldest assets. Go back in time to Mesopotamia, thousands of years ago. Gold was in use. It typically performs very well during periods of geopolitical uncertainty, inflation uncertainty. During those periods, we often see bonds perform bad, but gold still holds. And, we saw gold perform well during the 70s, inflation to the 80s, uncertainty through the Great Recession. And then again, we're seeing it this decade and this year performing really good. But want to note over the long run, you're typically going to see the U.S. stock market, the S&P 500 outperform gold. So quite an interesting year in how these indexes perform. CJ, what do you think about that?
Yeah, Tyler, it was definitely a great year. Like you said, other than Bitcoin and the US dollar kind of got beat down. But beyond that, I mean, it was almost like picking out of a hat almost anywhere you
Yeah.
put. It looks like you're going to get really good returns. And regardless of your allocation, your risk appetite, it was really, really a great year for 2025 all the way across the board. So I'm excited to see what 2026 brings. I know that we're going to talk about that in a little bit, look at some projections and estimates. But, I'm feeling pretty bullish. I'm feeling pretty confident. Let's see if we can get a fourth
You ready to
year
hit? You
into this
ready to
bull
hit
market.
your New Year's resolution for
Oh, I'm ready to hit
2026?
my. I am. Hey, some of the high beta stocks have already gotten me there this year.
Oh, here you got a head start on it then.
Yeah,
Okay.
they've been ripping to start the year. But hey,
Yeah.
Tyler, as we transition into the next segment, I want to do something a little bit different today. Obviously, we've got some big news going on with Venezuela over the weekend, so we'll make sure to cover that a little bit more in depth. But to start with that, instead of covering a stock of the week today, I want to actually cover a sector. And that sector is going to be the energy sector. So over the weekend, obviously, I'm sure everyone's pretty aware of what happened within Venezuela, but the market really made a big move in the pre-market Sunday night. And all of that's based off of oil and based off of energy. So the market took full advantage of the US's move going into Venezuela over the weekend. And in the pre-market last night, you saw a lot of energy companies absolutely just jump through the roof. Some names like ExxonMobil, Chevron, ConocoPhillips, Valero, Halliburton. I mean, all of these companies soared 10 plus percent last night, some even 15 plus percentage. But now today, as the markets opened and we've started to see some trading going on, you've seen a lot of those gains be harvested. So whether it was Wall Street taking in some profits or whatever it may have
Hmm.
been, maybe a little bit more of just that hype of what was going on coming back down to reality, you have seen a few of those companies kind of pull back into their normal trading range.
Hmm.
Now, all in all, though, the energy sector as a whole is up about 2-3% across the board today. So it's a great day for energy. But there's two companies I really want to focus on and talk about that have been able to maintain and hold on to those 10 plus percentage returns across the energy sector. Those two being Valero and Halliburton. So they've been able to lock in that momentum and kind of keep it throughout the extending hours of today. So why is that? Well, let's take a half step back. For those
Hmm.
who are unaware, Venezuela's oil infrastructure has been all but ruined. And now that the U.S. is taking control, they are planning to deploy the major U.S. oil companies to repair that infrastructure and restore Venezuela's crude oil production. So, over the weekend, as the moves were going on, Trump started calling in on the oil companies of the U.S., saying to get in there that we're going to need funding and we're going to need to start building out this infrastructure to get Venezuela's oil production back to what it used to be. So, Tyler, will you share what you were telling me with all the listeners about the prominence that Venezuela used to have in the oil market?
Yeah, so source from Reuters, the country was producing about 3.5 million barrels per day of crude back in the 70s. And this was about 7% of the global oil output. As of recently, that production fell a little bit, about 1.1 million, and just only 1% of global production. So quite a massive down drop. And actually, it's about now the same production as the state of North Dakota, where my dad and grandpa, all the families are from. So
Hmm.
crazy, crazy twist of events there.
It is. So that's a huge drop, right? And you're talking about Venezuela, a country with some of the largest oil reserves in the entire planet, dropping all
A
the way down
fifth,
to
a fifth.
production. Yeah,
Yeah.
a fifth. And they're only being able to produce about what'd you say, 1.1% now of that daily production. So that begs the question, well, why are Valero and Halliburton continuing to lock in those gains today? Valero, to start, is because they're positioned best to be able to process and refine that heavy crude oil in Venezuela. And as Tyler just mentioned, if you're talking about a company that's got a fifth of the crude oil resources out there and they're clearly not tapping into it, there's a lot of processing and refining that
Hmm.
needs to take place. Next, Halliburton. Why is Halliburton being able to succeed so well today in the market? They are positioned well to be able to be the first in line to build out that needed infrastructure to get Venezuela's oil back to where it used to be. They're clearly at almost a ruin right now, not able to produce it. Everything's pretty much run down and just not operating smoothly. Halliburton is going to be poised very well to come in, clean it up, get everything back on track to be able to get that infrastructure built back up so that the oil production can continue. So, I do want to finish with this though. This is not necessarily an overnight play. While you have seen a big run in these companies today, like I said with the other ones, right? ConocoPhillips, ExxonMobil, you saw that those gains were kind of harvested and retracted throughout the day. Still up 2-3% on the day, but I think that this energy and oil move is something that's going to take years to really come to fruition,
Oh
right?
yeah.
You're not going to be able to get in there overnight, have these companies start building that infrastructure out and fixing it overnight. So it's something to just keep your eyes on. It's been a very interesting move as we've seen it kind of play out over the weekend and today. But I think that it just points more and more that sometimes those winners just keep on winning. Valero has been a company that's been winning for quite a while now, and it looks like they're kind of positioned to continue to do that with what we've seen kind of transpire over the weekend.
Hmm. Yeah. So it's, I mean, again, as you said, it's going to take many years for the infrastructure to be rebuilt in
Yep.
Venezuela. There's still a lot of unknowns on what's going to happen. So let's buckle up, wait and
Yep.
see. Uh,
And
so that
Tyler, I
goes
do want
in.
to add one last thing
Let's hear
before,
it.
sorry to cut you off.
No, no,
This
no,
is
you're
one
good.
thing, this is a little bit of speculation, but I also want to kind of throw that out there is as you're looking at all these oil companies, these energy sectors, you may have seen how gas prices have retracted over the past few months. Well, that's because oil supply is pretty high right now. Demand's at a little bit of a low. Some of those crude oil prices have started to drop. Looking down the road, not necessarily overnight, but again, a few months or years down the road, you could continue to see that. If we're able to ramp back up that production in Venezuela, Trump's obviously been very pro oil, pro drill. You may continue to see some of those oil prices go down. And so it's a very interesting spot that we're in currently with that energy sector, where if you remove the events over this weekend and today, there's some speculation about oil prices, right? As they kind of
Mhm.
begin to drop in value, price per barrel drops. That's one thing that just hits both the top and bottom line revenue for those companies. So it's a very interesting spot to kind of be in of, yes, there's a lot of expectation for good value and productivity going forward, but at that, it means cheaper oil. That means lower revenue, lower margin for those companies.
And you know what you might also find interesting about that is OPEC's Plus has actually maintained its oil output as of yesterday, January 4th, 2026. So that's staying stable for right now. CJ, what do you think? You want to tie in a little bit as to what OPEC is?
Yeah, OPEC, that's a great one to talk about, right? So OPEC is basically the oil markets control room. It's a coalition of the major oil producers, the oil dependent nations that coordinate supply to influence the global prices and protect those profits, kind of what I was just talking about. So it was founded back in 1960 in Baghdad by Iran, Iraq, Kuwait, Saudi Arabia, Venezuela. Its core power comes from essentially one lever, and that's how much oil is going to be hitting the open market.
Yeah. And so right now we haven't really seen any adjustments in that lever so far, which adds a little bit more stability as to what the oil prices may be. Well, we're gonna have to wait and see. So diving in, what exactly did happen? I'm sure everybody has seen the news. Everybody knows about it. The Venezuela's shock, regime change, oil leverage, and the global fallout and also the other impacts that are going to happen, right? So the US launched a major strike in Venezuela that led to the capture of President Nicolas Maduro and his wife, who were taken to New York to face narco terrorism charges. Now, I'm sure a lot of folks have been seeing this coming, as this was the biggest US military buildup that we've seen since Iraq. So we knew something was going to happen. Nobody was too sure when exactly it was going to happen, but it happened over this past weekend here. So while the operation has weakened Maduro's inner circle, key allies still retain control inside the country. And this move has drawn sharp scrutiny from the Democrats and world leaders. And with Trump warning that the Venezuelan Vice President Delcy Rodriguez could face even tougher consequences if she resists cooperation. So for right now, it does seem that the Trump administration is keeping the vice president of Venezuela in power. Still a lot to see. And strategically, the administration is positioning this as a transitional intervention. Trump suggested that the U.S. could oversee Venezuela during a political handoff, using oil sanctions and regional military pressure as leverage. Um, Venezuela is the leader in world oil reserves, and it's not much of it is being in use. It's a fifth of the oil reserves, as CJ had been mentioning. So yeah, this does represent major upside for the U.S. companies. But again, there's years of economic collapse, distressed debt. There's a lot of debt that's going to have to be reorganized, refinanced with China for the direct Venezuelan oil companies, and so that's obviously going to muddle the path forward. So this is certainly a high stakes mix of geopolitics, energy, and global risk. Now, next up, going to a bit of a lighter note here, is the bank projections for the S&P 500 return in 2026. Now,
Tyler, I
heck,
am excited for this segment.
I know. I've been waiting to hear your projection. I can't wait to throw mine out there. You know, at the end of the day, a lot of people, they get together in a room, they start, just throwing darts to see what can happen, and with the S&P 500 over the next year. That's what we're here to do with you today. So right now we're seeing Morningstar currently actually rating the U.S. large cap, basically the S&P 500, almost 3% underpriced as of January 2nd. 2026. Kind of a little bit of a surprise for me as we've gone through three really great years with the S&P 500. CJ, you got anything to mention, reasoning why you think Morningstar may still be rating the US as underpriced, like the growth opportunities
Yeah,
going into next
it's
year?
it's interesting because I think you're just going to continue to see this because really right now there's going to be a few companies that are kind of pulling that down, and really it's the companies that have also been pulling it up so much. When you look at Broadcom, Nvidia, and Oracle, I mean those companies are slightly undervalued in my eyes right now. Now, Oracle we've talked about a little bit differently, maybe a little bit different in terms of how we feel about it long term,
Hmm.
but companies like Broadcom and Nvidia really really bullish on those companies in our eyes are kind of undervalued. And so when you see the heavy concentration companies get undervalued, that's where you're going to
Hmm.
see that entire market feel like it's a little bit underweighted.
That makes a lot of sense. So AI bubble is a little bit undertoned now by the Morningstar as we're seeing going into 26. So that we searched a lot of different places for the getting a nice good chart of the Wall Street forecast. So we saw the CNN review of Wall Street forecast. So this covers 16 major financial institutions. We will have a chart in our newsletter for you guys to take a look at. But the median projection is about 12% growth for 2026, or landing on the S&P 500 landing on 7,650 by December 31st, 2026. So that is, we actually are starting the year at 6,834.50. So CJ, what do you think about that? What do you think about that 12% median projection there? It's kind
I
of in line with the average. It's pretty
It
well in
is
line
in
with the
line.
average 10% return on the S&P 500. They're not really taking too many risks there from what I'm
It
seeing,
is in
but
line. I think this is you want me to go ahead and give my thoughts on what we may see this year?
let's go at it. Go at it.
All right. I think that as we continue to play out into 26, I think you're already starting to see it as 26 has started. These first few trading days, you're starting to see a lot of those AI companies, a lot of those companies that are not really necessarily making the revenues, really high beta companies are really starting to push again as we've started the year. So I think that you're going to see a very similar first half of 26 as to kind of how we finished out 2025. So I think
Okay.
Q1, you're going to see a lot of growth. I think that's what we're going to see. And then I think as we get into maybe Q2, I think we may get some type of pullback. You're going to get, we've got some midterms coming up at that point. You're going to have
Hmm.
also, right, the Fed chair, those sort of things. I
Hmm.
think that you're going to get a little bit of shakeup at some point. Not necessarily tariff level, but I wouldn't be surprised if we see some type of maybe 12% contraction at some point, maybe sometime into Q2, maybe late Q2, something along those lines. But then from there, I think we see a very similar recovery as long as those big AI companies continue hitting on revenues, as they continue hitting on those earnings. I'm going to
Keep
say
giving us
I
that AI efficiency.
keep giving us that boom. I'm going to say I'm coming in somewhere around we finish the year. I'm going to go over 12. I'm going to go probably closer around that 15% return is what
Going
I'm
around
hoping for
15.
in 26. So I'm saying somewhere around that 7,900 range, I think.
That's very fair. I think right there's two. I think the Fed chair is really not much of a question. I feel like that's a pretty stable pathway forward to see
Yep.
what's going to happen. There's going to be a favorable Fed chair for Trump. Interest rates may go down at a faster rate than they're currently going down. The midterm elections, that is up in the air. That's a question, and I could see how that could potentially lead to maybe more of a correction later in the year. Still got to wait and see how that plays out. Now, for my projection on the S&P 500, I'm leaning. I was at first kind of leaning towards somewhere between 0 to 5%. I'm
Okay.
probably going about like 3.5%. I guess
Okay.
slightly a little bit below like the 10-year yield. Now, this is a little bit different. I would the big thing for me is seeing just over the long run. It's very rare that we see like 4 straight years
Yep.
of 10% plus growth in the stock market. Now, yes, the S&P 500 averages 10% a year since it's opened, right? But
Yep.
that's variable. It can be up and down each year. Rarely do you hit right on 10%, and we've had since 2022, since that 2022 bear market ended. It was 20+% in 23 and 24, and then with dividends reinvested, 17+%. I'm gonna lean more cautious at around 3.5%, especially,
I
we'll
think
have
you're right on.
to wait
I
and
think the
see.
numbers kind of definitely, like you're saying, those numbers can back that pretty good when you look at it, especially where you're looking at PE ratios, long term, things of that nature. What you're just saying when you get, into an extended type of bull run. So I don't necessarily disagree, but I'm gonna stay a little bit optimistic, say that we're still in a middle phase of the AI boom in
Well,
my
let me
eyes, and
tell
I
you,
still think that there's growth there.
I hope you're right. I 100% hope you're right. You know, we all win if CJ is right. So,
That's true. We'll have to come back, clip this, see
yeah.
where we end December 31st of 26.
Well, what I want to note on here with the chart. So, CJ, you are most in line with Capital Economics in Deutsche Bank.
Deutsche Bank. Yep.
Yeah, that's
Shout out
roughly
to my friend
right there.
Pete. Shout out to my friend Pete, Deutsche Bank. I'm right on it. We'll round up. We'll go to 8,000. If Deutsche Bank's on 8,000, we'll go with 8,000.
I'm a bit more in line with Bank of America and Ned Davis Research. We shall see, and that leads us to the poll question for this week. We want to know from you listeners, where do you think the S&P 500 is going to end in 26? So, first answer would be 8,000, and that's 16.7% return. Second answer is $7,500 at 9.4% return. That's going to land you pretty average, right? And more in line with JP Morgan, HSBC. So the next one is 7,000, about 0%. So you'll be closer in line with my projection here. And the last answer is 6,000. And you're thinking that there's potentially, who knows, a little bit of a downturn year at negative 12.5%. So let us know. Are you more in line with CJ's projection with being up, over 15% for the year, or are you more in line with a stagnant year with me? I'll take it to heart. I will take it to heart, whatever you guys say. So we want to know. And CJ, I guess you want to let them know what happened with those
Yeah.
last week's poll results.
Yeah. To
Yeah.
close us out, last week's poll results. So the poll question of the week was when we were talking about Time Magazine, as they had the architects of AI for the person of the year, we wanted to know, who do you think is most likely to dominate the AI landscape a decade from now? And coming in, leading the way, same answers as both Tyler and I, coming in with 2/3 of the votes from you listeners was, in fact, Jensen Huang. So everyone out there seems like we're all pretty confident that NVIDIA and Jensen Huang have potentially still got some, good room left on the runway to potentially continue to grow.
Hey, he's
And
got the Riz. He's got the
he
Riz.
does. He does. So I agree. I think it'll be interesting to see how all this pans out. But, 26 is going to be a pretty pivotal year for that for sure. Because, compound growth, you got to continue just growing on top of that growth. So we'll see what NVIDIA's got in store for us in 26. I'm sure that we'll talk about them a bunch throughout the year. But as always, we appreciate all of you listeners tuning in this week. I think it's going to be a great year for 2026. We're going to have a lot to cover. And we look forward to catching you all on the next one.
This material is for educational purposes only and is not intended to provide specific investment advice or recommendations. Investing involves risk, including loss of principal.